Luke, welcome to the PLA podcast. We're so excited to have you here. We've known each other for getting close to a decade now, originally part of the People Tech Partners Network. And you're one of the original, when I think of like a talent partner at a VC company, you've been with Lightspeed for how many years now?
Coming up on 11,
11 years.
11-ish,
And
maybe over 11 now.
we are so excited to have you on today because I think you're somebody who has seen this role and the industry evolve in so many ways over the years. Definitely want to dive in with you further. For those in our audience who maybe haven't come across you yet, I can't imagine how many people have not yet come across you. You seem to know almost everybody. But for those who aren't as familiar with you, could you give a little intro of yourself to the audience?
Yeah, sure. So really happy to be here. Thanks for having me. So as you mentioned, I'm now an old hand at Lightspeed. I, previous to this, was essentially like a first head of people head of talent, where you'd find product market fit. I'd help you build the human side of the engine. And then way back in 2014, when these teams were really just starting off on the platform side, I happened to meet somebody that was building out the team as my last company was getting acquired by Yahoo and one of their final bad decisions. And I knew nothing about venture and nothing about this role. And fast forward to today, we've done tons of different experiments where overall we're responsible for helping our companies grow to and through product market fit faster. And we've tried every experiment under the sun. So I'm happy to just, dive into some examples of what we've done over the years.
Fantastic. As somebody who went into the role not really understanding venture, if you were to give like a couple minute overview for anybody who maybe isn't as familiar with venture from this side, maybe they're working inside of a company that is venture backed, but don't quite understand what that, the deeper parts of it. How would you explain that?
So let me start at the top. So venture capital, we raise money from what you call LPs. And those are things like university endowments, sovereign wealth funds, pension funds, high net worth individuals. And, the simplest version, the way to think of it is they give us $1 and we need to give them more money back. And so the way we do that is we invest in startups where we'll give them financial backing for a percentage of ownership of their company. And there's a lot of nuance to how much you invest, when you invest, how much ownership you get, how that changes over time. But the short of it is the name of the game these days is you invest as early as you can in companies. And then for the best companies in your portfolio, you continue to back them over time. And then once they have an exit, which is either you go public, and one of our companies just went public a couple of weeks ago, Netscope, we invested in them on a first round, probably the third or fourth week I was here. So about 11-year journey for them to go public. And either they go public and then you sell or distribute the ownership shares that we have to our LPs, or a company gets acquired. And then that's either a cash or a stock transaction. So those are the two ways that we return money. To be a top tier venture firm these days, you need to return 3 times the money you get from your LPs. In the old days, that would be in a 7 to 10-year timeline. These days, it's probably more like, 10 to 13 years. So we can talk about why that's shifted. And for those who aren't familiar with it, that matters because we're investing out of, called $7 billion of capital. So you have to 3x that net fees with, whatever the average ownership in the companies that really work. And so this background is useful because as we talk about what you do in a venture platform, you have a large amount of companies that you invest in. The power laws apply where in any given fund, 1 to 3 companies are really going to return that whole fund. And you don't always know where they are, especially early on. So they're quirky roles in that you support companies deeply, but also very broadly. And how do you do both of those at the same time?
Yeah. Can we actually go there and dive into that? How big is the Lightspeed portfolio? And then how do you think about when and how you spend time with those companies?
We have about 400 and something active portfolio companies now. To give you a sense of how time has changed. So back when I first started, there were probably 8 of these platform teams. We were one of the last top 10 firms to add it. At the time, we had a $600 million fund. That was pretty average for the size of a fund that we invested almost everything out of. These days, platforms have gotten much larger. So the large platforms, the Lightspeeds, the Sequoias, the Andreessens, the General Catalysts are all investing $7-8 billion. So orders of magnitude larger. The reason for that is the opportunity to invest in startups has grown, particularly in AI land. And we've also kind of shifted some of our strategy where we always had a historically heavy focus on early stage, but now we essentially have a fund for early stage, a fund for early product market fit, an early growth fund, and then a pre-IPO, last round of funding fund. So where my team focuses, particularly over the last 3-5 years, is working with our earliest companies, so in our first two funds. And these are everything from a founder with an idea that hasn't incorporated yet to a company that maybe has a basic prototype, maybe a couple design partners or customers. And so they need to do everything that's in the very fundamental parts of setting up your business, hiring your core team, figuring out your first use case, figuring out how to sell and monetize and price and then scale. And then we keep supporting them as we go. And if it's useful, I can tell you more about our full team construction. But my life is kind of essentially think all day about our earliest stage teams in a program that we call Launch, which is our kind of suite of services that we provide to early and pre-product, pre-revenue companies.
I'd actually love to dive in there. And Luke, thanks again for being with us. And thanks for the primer for our audience as well. So I guess reminder, most of our listeners are mid to senior HR professionals. Most of the folks that we know that are in our circle are the same people that are in yours, mostly in the tech space. And one of the primary reasons, other than we love you and you're one of the OGs, is because we thought you could uniquely help demystify how the VC talent partner role works. That sort of primer about like, where does the money come from? How do we allocate it? A lot of the people that are in operating roles in HR aren't fully aware of that. So understanding your stakeholders, understanding what they care about, how does it all fit together? I think that helps us do our job better when we're internal operators. So I guess all that is set up. I'd love to hear a little bit from you, if you're willing to share, like what is your role and that of the talent team inside a VC firm? What does that look like? And what does that include?
Yep, happy to dive into it. One more kind of primer context that's useful to know, particularly as if you're in a venture-backed company and you have multiple investors that have different kinds of, sometimes they're called platform teams, founder success teams, talent teams, like operating teams. There's all different kinds of names. Something that's useful to know is why do these exist? It's for two reasons. One is to help improve the outcomes of companies Lightspeed's invested in. So ultimately, we hit our mission of give more money back to our investors than they gave us. The other version that's important to know is because there's so much money in venture capital right now, and there's so few companies that are really going to matter and be generational companies, there's hyper competition for any platform to invest in a founder. Think of it like a candidate that anybody is having a hard time hiring research engineers right now. They have dozens of offers and some of them are, at crazy prices. That happens in venture too. So we're both helping companies grow, but also we're a sales and marketing function to convince the best folks to work with us. And so roles are kind of bifurcated. So fun part of my time is meeting with and kind of selling us to new founders of here's all the great things we can do for you and why it'll matter. And then from a practical perspective, as you're working with a venture talent or platform team, because there are lots of companies, and as I mentioned in the very beginning, the returns for a venture firm are going to be driven by a smaller percentage of those companies. It's kind of useful to know where you might even stack rank in the back of your minds and how much, kind of real talk calories are you going to get from that team. Just to make it a really clear example, let's say it's a company that has really struggled to pivot into new AI land, revenues flat, and realistically, the best outcome is going to be probably an M&A, an acquisition at some point. If you go to your platform team and you say, hey, we got this really important CRO role, we want you to run the whole thing, you might just not get the full resources of them going really deep into kind of hands-on helping you. You might get more of an advisory type role. And that context is not always really clear. So just having a sense on how you're doing and how that fits into the broader firm strategy can just give you a little bit of a better expectation on like the level and depth of asks that you can have.
Maybe peeling that back a little bit, with 400 and something portfolio companies, they can't all get a lot of attention. And there's no way they'll all get equal attention.
It's a good point. I'll use that to talk about what I do. So we're always asking, how do we do something that is deep enough and useful enough that it actually matters to a company? And how do we do it at any kind of scale? Because we continue to invest very quickly. The way we've done that is we've built out the team a bunch. So there's actually 20-something people that do different parts of our team. And then we have sub-teams that specialize in a stage. So what I do these days is I'd always spent a lot of time with early stage teams. And, phase one was, doing the literal version of what I thought was hard when I was in a company. And so if you're coming at this from talent and HR land, you're like, all right, there was all these hiring challenges and kind of company building challenges that are really important. And that's just when we'd worked with each other a lot most in the past. A lesson I had early on is, because we're responsible for helping to impact trajectories of companies, if you go too deep and literally into your own expertise, you kind of lose the forest from the trees. and what is actually talked about at that board level. And so if anybody's looking to explore these roles, over time, you have your core of where you are really strong and that's your expertise, but you can expand out and move horizontally. And so we started with doing a lot of like recruiting stuff. We found that, that felt good. We had a lot of metrics to point to, but ultimately it's not really changing an outcome of a company. Somebody joins, leaves 6 months later, like how much does that matter? The roles that really do are very key senior executive hires, key advisors and board members. So then we moved into phase 2, which is, all right, well, can we do something more programmatic where we support our people leaders and help them instill really good people practices? And we spent a bunch of years building, like, how do you think about comp frameworks, performance frameworks, onboarding stuff, building and scaling your recruiting team. We actually ran recruiter trainings for a while back in the day to be like, all right, if we can help you learn how to hire, this is probably going to be useful to your company. That worked better, and it was more tangible, and it was more scalable, and we could point to, all right, there's behavioral changes in the companies. What we then learned was it's still probably too niche and vertical focused. So starting like 4 or 5 years ago, I essentially just decided, hey, I'm going to expand my role. We're going to take what we learned in the first 2, and we're going to apply this to what does a company actually need to do? You need to operate like a business. And early on, it can be very simple, but you still need to know how do I build an operating model? How to run a board meeting? How do I set up all this annoying stuff that is solved for payroll benefits? And then ultimately what people are thinking about is they need to hire a couple really good people on their founding team, and they need to learn how to sell. And so we run these days lots of programs that have mini sprint cohorts, that have expert-led sessions, that have advisors and mentors that kind of help them with every part of the, how do I build a team, go to market, pitch a customer, sell a customer, price a thing, do customer success. And we think of this more holistically from what are the things that founders have to get right to get to the next gatepost, which is usually a round of funding. So it starts with pre-seed or seed, then it goes to A, B, and you keep going forwards. So our early programs in particular are meant for the common challenges that everybody has at these early stages, and they actually are repeatable, which is great, particularly if you have the same go-to-market motion. Then we have our specialist team of, there's 4 folks on the exec talent side that all they do are like first-in exec hires. So, your first head of sales, first head of ops, first head of engineering. Then we have a different part of the exec team that does more senior leadership, CROs, C-levels, presidents, CEO change ups, that kind of thing. And then we also have a go-to-market team that one part of it focuses on getting you your very first customers, your design partners. And then the other part is more of an at-scale kind of briefing center style, like machine that you plug into. And then we also have this function in EMEA and the US. But this is a long-winded way to say that you have to build a bunch of modular things that companies can plug into as they need, where you solve what are the repeated challenges. And then for things that are unique to a company, which there are many, you can prioritize how much time you go deep and spend with them. You can't really brute force everything. And realistically, that doesn't mean that not everybody gets the gold tier of everybody's time in every one of these functions. But if you build a good foundation, you can do a lot for essentially an unlimited amount of teams at once. And that's where the core of all of our early stage stuff starts.
Thank you. Hearing about some of these offerings, and that matches up in some ways to the private equity work that I do. Like there's playbooks, but a much smaller set of portfolio companies. So the relationship is different as well with a control investment. As you described some of the first hires and some of the initial setup and the go-to-market motion initially, I wonder, Luke, if those are kind of time-bound and stage-bound. I mean, it sounds like your funds kind of match up with stage of company. I wonder if your offerings then, correlate pretty squarely into those, like fund size and stage with offering stage, and if you have kind of a different chapter in the playbook for the different size and stage companies.
We do. It's a good insight. And, it roughly maps to seed and Series A. And for folks that pay attention to venture land, like some of the shifts that have happened, particularly in AI land, like the size of markets are so much bigger than they used to be. And the ability for companies to scale revenue is happening so much faster. Like it's night and day from even 2 years ago. So for folks that are interested in this at all, or if you're evaluating an early stage company, like my programs usually touch on, call it pre-seed, seed, Series A. Even that's a little fuzzy because, for instance, we did a $100 million Series A round for a company that had no customers, that had a really interesting kind of coding model. They were building their core team. And then our job was to help them build out that team, get their first customers, figure out the go-to-market strategy. But overall, what investors are looking for, there's a big gap now between the ability to raise a seed and the ability to raise an A. The old benchmarks, called 3-4 years ago, were if you had some early customer traction, couple paying customers, maybe made some good hires, you had like decent, customer feedback, essentially you could raise an A. And this was in like 2020, 2021, and you could raise it pretty easily. these days in AI world, if you're not getting to at least $1 million in revenue in your first year of selling, and our best companies are doing 3, 4, 5 million in their first year of selling, then you're going to have a very difficult time raising those subsequent rounds. And that bar just keeps changing. So as folks on these calls are evaluating early teams, things that you want to ask about and try to get them to tell you is it's not just size of revenue, it's velocity of the revenue, quality of it, how much are people churning. You're making a bet that, a company raises funding and thinks, we have 18, 22, 24 months to hit our milestones, to hit the next thing. Otherwise, we run out of money and you either raise debt or you kind of go out of business or you sell. So, as you're evaluating companies, there's just a different bar for being a successful one of these high-flying like AI teams that you see. And for folks on the call that aren't at one now, you probably feel a little bit of the crunch where hiring's slowing down. There's a lot more cost controls. There's not a really clear plan of like, what's the next product pivot or how do we kind of grow into one of these high, fast-growing revenue companies? The marketplace has just changed a lot. And sometimes, talking to your talent ops partners, they'll have a little more of this information that you can just kind of ask them, where do we fit within what you see in the companies you invest in and overall in the market? And what might that mean for the way that I should anticipate needing to build and support the team? Like, is this a keep heads down, keep costs low, and keep really key hires there so we can build that next product? Is this we need to grow really fast and just capture market? Like, it does change the role of an HR or talent person in the kind of flavor of company that they're building. And it's kind of bifurcated now. You're either in this smaller echelon of wildly fast growing ones, or you're in the let's really tie revenue to headcount, be very, very deliberate about every investment we make, and try to find the product that's really going to hit and put us in that first category.
That's a really nice segue into something that I know we want to talk about. We want to talk about how HR professionals that are inside these portfolio companies can best interact with the talent partner, the investor. But before we go there, I'd really like to pick at, again, the insider view. As a talent partner, as part of the platform team, what do you look at, or even what do the managing partners look at in terms of how the platform team is adding value? How do you dimensionalize that? How do you prove it as you're doing your work?
It's a great question. And over the years, we've done many like VC talent people meetups and happy hours. If you get people together, the number one topic you're going to talk about is this, which is what are the metrics that you're going to put in place to show, does this thing matter? So for folks moving in from an operating role into one of these roles, for me, the hardest part was you have to change your brain and like the little dopamine hits you get, because now you're in more of a consulting role than you are a building role. So it's not hey, I found this person, I hired this person, we got them on board, they're doing amazing, I see them out there, I did that thing. It's a lot more of helping companies think through frameworks and how they can apply them to themselves. So the early days, all things are equal. We made a bet, a new investment. We're really excited about that. The first couple of years everybody has full potential. They're like little babies. Over time, what we'll look at as companies mature, some of it is how much have we invested in this company? How much ownership do we have? What is that potential value today and going forward? So how important a position is this for the fund? And then for ones that are in we call it high NAV, there's lots of like dollars at work there. We have an internal team that's actually all former private equity folks that actually go and they do transformational stuff. They'll help them rebuilding ops plans. You'll work on any key hire they need. You'll do really kind of bespoke customer stuff. We have like a team that figures out account plans for those really key companies. From our day-to-day work, we track lots of metrics like how many intros did you make? How much have you participated in our programs? What's a founder NPS score to say, hey, were you helpful or not? You just ask them a version of yes or no. Realistically, how correlated is that one-to-one with you did a thing and did that change the outcome of a company? It's actually really hard to measure, partially because companies don't measure anything. Like think of your internal team, like what kind of metrics dashboards do you have? Now imagine tagging Luke as having done any of the things in that. There are metrics, but it's a little bit based on, on voodoo and then a lot based on founder vibes. So do we get a high NPS score so that people say that was a great investor, a really helpful board member, somebody I would tell my friends, take money from them. Some of that stuff is the tangible things you do. Some is how you help people in down years. A year that you're struggling, is your investor going to ignore you, or are they going to invest a lot of time and effort into helping you figure out the next plan? Like all that stuff feeds into the soup of, is this a good investor or not?
For what it's worth, I think that lines up like perfectly in terms of what is the portfolio company talking about, like the vibes and thinking about capital as a commodity. And that just helps you compete for the next hot startup down the road.
And an example of a program we're running now. So we run CEO accelerators where They're led by an exec coach, 10-week programs, hour and a half each week, group of 6 to 8 other CEOs of their stage, super deep framework-driven work around two versions. Either how do you become a CEO for the first time? So being a founder, being a CEO are two different things. And once you need to hire people, manage through those people, focus more on direction and strategy and fundraising, it gets lonelier and lonelier. There's a version for like the how do I be a CEO? And then there's a growth version for how do I master being a CEO for later stage companies? And they get 360 reviews and they do lots and lots of work. And we're trying to figure out how do we tie that back to execution over time. And the best we could come up with is keep doing 360 reviews and then look at top line, what changes in a company, and then try and smash them all together. So there's some projects you do that you just like, I fundamentally know this matters. Mastering CEO and not going crazy because you're stressed and totally isolated. Those are going to materially impact companies. To what extent can you measure it? Hard to tell.
What does Lightspeed think about from year to year? Like what your team's maybe budget or, how large of a team that they have, given that it is hard to measure these things. But I guess what are the factors that go into deciding like next year, let's go even bigger, or we're going to shift direction. What do those conversations start to look like? Especially we're getting into Q4. I'm guessing that you're going to be starting to have them if you haven't already for this coming year.
Great question. So one thing that's useful to know if you're thinking about joining a venture firm is they're terrible at everything except for investing and then specialist areas. So, and know, like we don't build a product. We're not creating a widget. We are trying to find the next generation of the most important companies and founders and then support them to achieve whatever that underlying goal is. You can see that's a lot of gray area. So you'll notice a big difference in what different talent teams do and where they focus. A lot of that is, what are the capabilities of people on the team? What's the makeup of their portfolio? What do they enjoy doing and where do they think it matters the most? What can you convince the investing team that is useful for them to sell? So like go to market, say, hey, we're going to do this thing. Is this unique and something that'll support us winning those deals? So that's all a big soup. The expectations at any of these places it's a lot of type A people because you're expected to go figure out your thing, do something valuable, communicate why it's valuable, and then if you want to do more of it, make a case why we need to do it, and then just go do it. And then show that it works over time and keep it rinse and repeat. So what we tend to do is every year at the end, when we do our planning, we'll look back and we'll mash all those pieces together. I mentioned about engagement and founder feedback and tangible things that we can tie to with, selfishly over time, since I've been here for a while, I like to spend time doing things that make me happy. So where do I actually get energy spending time? Because you're always going to be better about that. And then how can we just kill the things that aren't important, aren't interesting, and that we don't think actually impact anything, make a new experiment every year. And then the ones that work, double down on those things and, wrestle the bear for budget around it because there's not like set P&Ls, like they're strange places. They're not really companies. So that's not a very precise answer. It tends to track with all my peers that I chat with as well. Like you need to have a vision and then you need to advocate for it. And then you need to show that it matters. Within that, these roles are really kind of whatever you want to do that you think hits those goals. Do we win deals that we want to win? And do we help companies build more value over time? Other than that, there's really no rules.
Yeah. I mean, what a valuable perspective, though, especially for somebody who's thinking about one of these roles and trying to figure out, is this interesting? Like, would this be appealing to me to be in this environment where they're good at investing and not much else, and that I would need to be more of this proactive, creative, innovative, experimental mindset kind of thought process. I'm curious on the other side of this, if someone is in an operating role, they're in-house, maybe they've just come to a portfolio company within Lightspeed, what would you recommend would be the best way to partner with you or with your team?
So when this has been most successful on both sides, it's like any relationship where you want to actually have a connection to the other person and you want to give them context on what you need. So, sometimes we'll work with folks where it tends to be a little more transactional, just blast over, here's a job description. Who do you know in the network? There's lots of context, even though we have the board view, that still doesn't translate into like really understanding the ins and outs of a company or role, the type of person they want, the dynamics around how that role's evolved. So I think folks, when you start in the beginning, reach out to whoever the talent partner is in your team, schedule time to have a coffee, have a Zoom, and do the human interaction piece first, and then update them on what is the context. It doesn't have to be super precise, but what's going on in the team and the company, and what are you focused on, not just today, but coming up. And so help them anticipate what you need, being very clear then about what you need, and then asking, what's our workflow? How are we going to partner on this? let's say you come to us and you're like, hey, we want to hire like an engineering manager. We focus our networking efforts on leadership roles. So head of, director, C-level and above. That's ultimately the folks that join companies and build teams and organizations. And so we're not going to be a great partner there, but it's difficult for anybody to ask us a question we haven't gotten many times. So I tell folks when they first join, like, I'm your help desk Sherpa. So if you're annoyed, blast me with any kind of question you want. If I haven't heard it, we'll figure it out. And then for more important strategic things, let's actually have a sync up and build a plan around, problem you're trying to solve. Is this in our concentric circles of where we think we can be really valuable for you? And then feedback loops of how things are going can be really useful as well. Oftentimes, work with a company on a project and then, everybody gets busy and goes dark. You don't hear about it for 6 months again. Probably not the best kind of partnership model to go back and go really deep on a project again. So show up, be a human, be really clear what you need, and then, have some kind of feedback engagement mechanism for how that thing is going in the company.
Yeah, super valuable just in terms of like, first to just set up that human connection to establish and understand how does this particular firm work with companies, and for each of the investments, and not just if you're a Lightspeed portfolio company, but like every investor kind of go through this, meet the talent partner or whoever's on kind of the equivalent team and understand where do they shine and how can you leverage them. But then also follow through. Like if you are going to leverage them, really be involved in an engaged partner. It's a give and take as much as it sounds like your team would give. If no one's like kind of giving a return, then it makes it harder the next time around when there's an ask. So just keeping that in mind as well.
That's a great summary. And sorry to cut you off, I'd add one other thing. So as you have multiple board members, every firm does this slightly differently. So if you go meet multiple folks, then you'll have a mental map of, all right, Lightspeed's really strong in this area. My other investor is actually much better suited for this. Like you don't have to use one firm for everything. And we tell folks all the time too, hey, we're meant to be complementary. If this is already something you're getting from a previous investor, great. Everybody knows each other. They can share notes where you need to, but because this is a ubiquitous model now, you're going to have multiple platform talent teams that you could take support from. And then you just want to figure out how to do it most effectively. What I wouldn't recommend doing is like, let's say you have a really key role and you talk to the exec talent teams in isolation, everybody with the same question and like all four of your investors or whatever it is, so that they're overlapping networks, reaching out to the same folks, feel like, all right, there's a search firm on this and a bunch of other people. Again, it's just probably not going to be the best partnership model for you.
That is such valuable advice in terms of it's tempting to say, like, we have a problem, let's put all the greatest minds on it, but actually it creates a lot more interference than it is helpful runway. I'm curious, there's always this element of if I work with a talent partner, how much do they say back to our board member or, the investment partner? How much should you as a head of people really share with a talent partner? Are there any lines at which you're like, ooh, you probably want to be careful here? Or
Yeah.
here are a few topics that you definitely should share and would be really useful?
Good question. So keep in mind, this is a fiduciary that has a legal fiduciary responsibility as an investor in your company. So if it's anything that would impact the fiduciary relationship, you have to say something. Oh, there's been a case of, an executive employee relations issue that's even legally gray. You have to bring that up. I'd always recommend just starting by asking people, like, how do you handle these relationships? I find, because I've worked with lots of our people over time, if somebody doesn't feel comfortable being honest with you outside of this is like a legal issue, then you're really not going to be able to support them very effectively. So my approach to this is every company is messy. As long as we're not we're stepping into the fiduciary relationship side of this, you can unload about how you're doing something, it's not working, folks are leaving, you have to figure out a way to, cut off attrition. Maybe there's some, specific coaching work that you need. And these are just the normal operating pains of business. It's kind of unsatisfying to act like a robot near another person. So I like folks to be as honest as they can be, but you just have to keep in mind there will be a line where they're going to have to bring it up to their investor. So, person to person, I would just ask.
I'd love to explore that a little further if you're willing to go there. We don't need to name names. One situation might be a head of people that says, oh my goodness, my CEO founder is a disaster. They can't communicate, can't prioritize, can't make a decision, whatever it is. And you're getting feedback from the HR leader that you might have a direct relationship with that somebody very senior is broken.
Yeah.
How much of a red light is that for you as a talent partner? And what do you do with that? Or are there multiple paths?
There's multiple paths, and I don't want to make it a dodge, but it really depends contextually. Obviously, that's come up plenty of times.
For sure.
It is very difficult to be a leader. And then also, we all have one view of the world. And, some of our best founders are extremely difficult people to deal with. Like, just personality wise, like they've been told no and that their idea is really dumb and I don't want to fund you. And like most of their life is getting like kicked. And so the people that can survive that and do it really well tend to be a little bit bullheaded in some areas. There's that level of normal, like just kind of challenging person to deal with. I would say when things come up as themes where we'll notice something, for instance, using your example there. So we're working on executive searches, can't really make decisions around what's the profile, run a process that they're able to build a view of somebody, get the team on board to facilitate feedback and either make a decision themselves or go by committee. And then at the same time, a lot of behaviors that happen in recruiting happen everywhere. There's a lot of like executive team turnover and turmoil, and you're finding that some of those behaviors show up when you're working with really key customers and not really following through and delivering like a really good experience when we make a key customer intro. Those types of things, once we see a pattern, it's usually time to go speak with the board member about it and say, here's something we're observing. The way I've handled it before is I've just talked to the person ahead of time and said, hey, this is like, I'll anonymize it from you and just say, this is feedback that I'm getting from the team. But I just tell people ahead of time that this is something I have to bring up, just so you know, but I'm not going to use your name around it. I'm just going to share the thing we've noticed multiple times. That's probably what comes up the most, because once you see something in 3 or 4 areas, it's very likely existing in others. The percentage of founding CEOs who exit a company, like I saw a number on it years ago, it was like 10, 15% or so that stay in those roles, don't move into a separate one, hire a professional CEO. It's a really hard thing to do. So everybody's going to hit a growth wall at some point. But yeah, it's a lot of case by case. I wouldn't say there's one exact rule of these 3 things happen and then you say something.
Yeah, that's fair. I'd love to get your insight on, like, you're, again, one of the OGs. You've built a strong team at Lightspeed. You've shaped it over time. You've shaped how other platforms think about their talent teams as well. I hear from a lot of people, because I'm kind of fractionally in a talent partner-like role in PE, I hear from people that I'd like to do what you're doing. How do I break into a platform type role? And I want to hear from you what you might share with people, because I bet you get the same question.
All the time. And I've done dozens and dozens, if not hundreds, of either I'm thinking about this, how do I find it? Or how do I evaluate it as I'm talking to them calls? Or I just started this, what do I do now? And for anybody that's new in this role, that's listening, that's actually in one of these, give yourself grace for 6 months to a year, because they're weird places to adapt to. So, I would have existential crises every month for at least a year. That's normal. You have to learn a whole new industry, a ton of new people. You feel like everybody you meet is more knowledgeable and smarter than you in every possible way. And there's no clear roadmap or feedback loops. And so you're in like a little bit of a fishbowl. That's super normal. And I would say actually ubiquitous for anybody moving into a new venture role. There's not just one path. I randomly stumbled into this without knowing anything about it, just because a guy I knew happened to know the person that was building this team at the time. And then stars aligned of us, like, I don't know if I want to go do a first in thing again. Here's my plan. If you don't like it, okay, I'll see you later. And ambivalence is a very attractive trait sometimes for venture land, because everybody here likes to sell. So these days, it depends on exactly what you're doing. So if anybody here is in a talent or search role, the exec talent folks generally tend to come from executive search firms, because they know how to run a search process with multiple clients, maintain an executive network. Like, it's a very similar motion to be in an exec search firm to here. For firms that have IC engineering hiring, they usually tend to come from, startups where people might be aware of the brand name and have known for hiring good teams. And they join to do a little bit of talent advisory stuff, but it's a lot more of actual kind of almost like agency side, meet a bunch of people and introduce them to some cohort of companies. And so if you're in one of those roles, get to know the talent partners running those teams, because as they build them, they'll be like, all right, I'm thinking of you for my hiring team. People is a little bit more rare. There definitely are some. I think the reason that it's more rare to some extent is the obvious things to do are, all right, every time we invest in a company, they need to hire. And so usually when a firm starts off, they start off with a exec talent person and then, kind of expand out from there and then start to build other services around. So use your existing teams, whoever the investors in your company, reach out to those talent teams, You can even tell them, here's what I do. I'm interested in this one day. There's a lot of folks that you'll just reach out to talent partners and just do a listening tour. These roles usually aren't posted. They're through networks and word of mouth. So just being really visible can be helpful. And then working with talent partners. Like, you've consulted with a million of these folks. And so I think your network here is incredibly deep as well. Like, there's not like a secret thing that you can do to be plugged into the network. You kind of have to network your way into the network.
That's fair. Well, again, the goal of this conversation is to demystify it for people. I think there's this belief that, oh my goodness, I've been running so hard in this startup with a crazy founder, and I can work with professionals in an advisory role, and that's easy. And I can put all that I want to into play, and it'll actually get done. And I find myself like constantly telling people, like, the grass is not greener.
It can be a different kind of brown, for sure. Yeah. The difference is things you have to do. So in a company, when you're in an operational role, there's a clear role that you have, clear actions to take, and then clear measurements of your success around that. People who thrive in those environments often struggle with the totally unstructured, hey, do something good. I'm not going to tell you what good is. If you ask me for feedback, I'm going to say, I don't know, you tell me, and then go do that thing and then decide really on yourself, is this a valuable thing or not? And then in firms, to get buy-in from folks, you actually end up having to be really good at internal selling and marketing in a way that doesn't exist for these types of roles in companies. So half of what you do is actually internal sales of, oh, reminder, this is the program we run, here why it's really cool, company example, here's how we sell the thing. We're all in sales roles to some extent. I sell to founders when we want to invest in them, to internal stakeholders on why they should remember and care about the things we're doing, to peers on why we should co-design stuff and build things. And then you need to keep repeating it over and over and over again. That, I think, is what throws people off the most. And if the idea is, I'm going to come in and just do what I did before because it was valuable at this company really, really well, and then everybody will notice that good work, and then I'll be successful in the role, nobody's going to notice anything. You really have to carve out your own space.
That is so beautifully said. Again, a good reason to demystify, right? I don't think that anybody's trying to keep a secret that that's how these roles work. It's that just not as directly, publicly talked about elsewhere. That proactivity and internal communication are at an entirely different level, and there just are no real expectations other than be useful.
There's also parallel here too of the level of kind of networking that you need to do to get the role in the first place is actually similar to the level of networking that you need to do internally to kind of continue to stay in touch with people and keep them up to date on what's going on. And the kind of selling element is also is connected to that networking element that I'm hearing as a strong skill that would make somebody really successful in this role.
Yeah. And then learning how to storytell and sell, I think, was something that took me a really long time to do. And, the kind of classic mistake anybody makes when they are thinking too operationally, and most folks are probably doing this internally in their companies, you start with this laundry list of what you're doing. And then maybe at some point you get to the why, and then what impact will this make on the company itself, when really everything should be flipped. And so when you want a new initiative, you walk through what is the value of this thing, and then the why and how I'm going to do it piece. So, I look back at some of my old presentations from the first couple of years I was here and prep for this, and they are humiliatingly detailed there's graphs and charts and recruiting funnels, and you would have no idea what I was talking about because it was just deep, deep in the weeds. Now everything is framed in terms of, we want to improve our portfolio companies' outcomes, but everything we build, we're going to sell this so we can get into the best companies. Once we invest in them, we're going to help them be more successful faster, and that is going to result in us having better fund returns, particularly compared to funds before we did this. So in your question about metrics, what do we look at? So a lot of this programming is new in this set of funds. So our kind of control group is last set of funds when we didn't do it. And then we look at conversions from C to A to B, and so forth. And then how much did we invest in them, and do we increase ownership? And then how is that different over time for each of those cohorts? So can you say that our team's directly relevant to each of those? Exactly correlated with? Probably not. But if we're building all this and the goal is to help founders build better companies, that should be showing up in our top line metrics of performance of our companies moving through the different stages of growth should be materially better.
I appreciate that structure of impact, why, and how. And I think that's applicable both in your role, but also in the in-house operating roles as well, of when you're communicating upwards, that impact first is really helpful to frame the story. Can I ask one question, which it sometimes is a little tricky to ask people when it comes to compensation type matters, but in these types of roles, especially in the VC world, there's this concept of carry that I think is pretty foreign to most people until they start exploring this land. Could you share more about how these roles are often structured and maybe what's different and what is carry and when do you even get it and what does that look like?
Happy to talk about it. So the easiest way to think about it is carry is the closest equivalent to stock options, but in a venture land. So as I mentioned, the way Lightspeed makes money is we raise money from LPs. We're responsible for returning money to them. After you return 1x, so they give you $1, you give them $1 back. It's a little bit different based on fund and exact terms, but easy enough to think of it as 20% of the dollars that you deliver to LPs over that return of the $1 they gave you goes to the fund as carry in a big old chunk. Then that is divided up in an archaic way that nobody will ever truly understand at any given fund and allocated by whoever are the carry recipients. And those are essentially almost always the investing team. And then it can be wildly different fund to fund on who on the non-investing team gets it. Generally speaking, an operating partner or somebody with a partner title almost always will. Some funds will give carry to VP level folks. A few give it to all of them or do like a shadow carry thing that's not worth getting into now, but like a different way to deliver the vehicle. And then some funds don't give it to anybody, not an investor or a partner level title. So I would just ask, it's very difficult. There's no benchmark data. It's really opaque. Like if you're in a specialist role within a platform team, there's just not enough of you for like useful survey data. And so it's hard to understand the methodology behind it. The way carry works is just like stock options, you vest into it. Generally speaking, it's between 7 to a 10-year vesting timeline. So that's important to know is it's a lot longer than you might be expecting. And then there's usually a 1-year cliff involved. You keep it if you leave, whatever you invested into. You keep that carry if it's true carry, not like a shadow carry piece when you leave. And then it's taxed as a capital gain, at least as of today, which is kind of a weird little like loophole for PE and VC that can be very beneficial to you is it's not as ordinary income. It'll usually be communicated. It's called dollars at work, where they'll say, hey, it is this percentage, but, it's whatever, $10,000, assuming that we double the size of our fund. That's how most of these people calculate it. And then if they do better than that, then it's a multiple of that number. And so you get your number, divide that thing by 10, assume there's a 1-year cliff. And then for some folks, there's a thing called a capital commitment, which is overall to show their skin in the game. Partnerships have to have between like 2 to 5% of the total money they're raising coming from the partnership itself. And then again, based on a lot of different factors, they'll divvy that up and they might say, hey, you have $10,000 in carry, but you have a $1,000 capital commitment, a $500 capital commitment. And then you're responsible for paying that in the, whatever it is, the 2-3 years that it takes them to invest the full amount of the fund. So there can be times when you actually have a piece you contribute. The more senior you get, the more ubiquitous that is, and the higher that number will be.
Thank you for sharing that. Like in a nutshell, what I think for many takes many, many conversations to kind of pull out and understand and get through a bit of that opaqueness.
Yeah, could I clarify any of that? Because I realize I gave you a lot of terms really quickly. In summary, ask them if they do it. It's a really good thing. Ask them the vesting window because you don't know. It can be 7 to 10 years. And then just keep in mind for folks that are going at a more senior level, the piece that you have to contribute as you raise multiple funds can actually be a very meaningful chunk. And so that's unexpected to a lot of folks that there might be a pay-in aspect.
Well, you set it up, I think, really well by comparing it to equity. It's another complicated long-term incentive plan that there are special tax situations around and can be really foggy. I did a bunch of searching to try to find, PE, operating partner, and advisor comp, and through enough Googling and ChatGPT, thank you, found some decent resources. But you're right, it's a small enough group that feels really awkward sharing some of this information. So it's not like you can go get a Radford comp study for jobs like these.
Exactly. And then again, every firm is different. So, we're a massive platform now. So we're going to have different and probably more rigid rules than, let's say, you're joining something that's a first-time fund where you're almost like a startup founder with them. They're much more likely to have like a really meaningful carry component. It's like, do you join Google or do you join a really early startup? Or like we're pretty mature at this point. So our rules and structure will be a lot different than smaller, newer funds.
That's fair. That's fair. Luke, I'm conscious that we only have a few minutes left with you. Would love to move into kind of a quick question, quick answer series that we call our accelerator round. So 3 questions here. The first is, so many people benefit from your support as a talent partner, and then especially the Lightspeed HR and recruiting trends report that you put out. That's massively helpful. The question for you is, where do you learn from, and what sources could you recommend to the audience?
So I'll give an answer that's not approachable to the audience, but I think is the most enjoyable part of my role. Since these aren't real jobs that have to do a real thing, some of the program we build are things that I'm interested in and want to learn. And then if you enter one of these roles, you can audit anything that you want. So it's almost like a mini MBA program. So we just went through a series of how do you deal with pricing in an AI in an agentic world? And how is that changing like the way that traditional software as a service models or seat-based models have worked? I didn't know the answer to that. And so we did expert-led sessions and I just got to go to all of them. And so you're getting this expert-led version. If you enter one of these roles too, you can talk to really smart people and ask them anything you want. It's almost like probably having a podcast and you can bring on folks. That's one way. And a way to make that more tangible to people is we can all benefit from better understanding our companies. I think lots of folks work at places that they don't actually fully really understand like what the company is doing. You just have your space of it. So is there a version of that where you can audit and an engineering stand-up, a sales meeting, a customer call? Like, are there pockets of expertise in your own company that you just show up if it seems too intimidating to like go do a little interview? Like, you'll be shocked with how happy people are when you say, I just want to sit in and like listen and learn to what you're doing. So can you do that? I've learned a ton from peers. I haven't yet invested in peer-to-peer networks where I think it works best when you actually show up and share real, authentic challenges. It's not a winning tour. It's, share what you're doing, what you're working on, what you're thinking about. And then usually you get the most value from what's not going well. And then as you can learn from other folks, there's not that many ways to do a lot of functions. So can you get away from following a couple bad paths or learn from somebody else? I also just read a ton. And I don't know, for whatever reason, I like to read tech blogs, and I probably spend too much time on VC Twitter. And then another unique thing to hear too is whenever we do an investment, the investing team writes an investment memo, which is 4 to 20 pages long, breaking down a product, a team, a market, competition, technology trends. And so, I feel fortunate I get to read those as well. But again, taking a step back, there's definitely knowledge in everybody's roles and probably networks and lives that you might not have thought of raising your hand and just be like, I'd love to see that. Even if it's not, one-to-one related to where you spend your time, being smarter about things is always beneficial. So kind of steep yourself in something new. Like when you go to work next week, pick one team that you don't know enough about and just ask them to audit some kind of meeting.
Maybe a nugget to pull from that is like, be proactive, be self-directed. You don't have to go sign up for a training course or another degree. Ask the people in your network and broaden your network at the same time.
Yes. And often what you learn, other than your amazing program, most training programs are not following the pace of current change. And so talking to peers can give you a much better on the ground version than getting another certification in a thing that, is a little bit outdated.
Yeah. Yeah.
Also, if we want to take this back to venture down, tell your venture down partner, hey, I want to get more involved with XYZ. Is there anybody I can meet and mentor? Do you have events I could go to? What resources do you know about? If folks just know, they might be like, oh, I know 3 people who are doing this. They all get together once a month. You should join them.
That's an easy one for the talent partner. All right, second question. One sentence of advice could you give to our listeners about how to accelerate their own HR careers?
It kind of relates to what we just said back. Learn more about the business that you're in. The more senior you are, the more you're going to be expected to understand how the actual business operates and then how what you do fits into the company's strategy and success. It's not just a series of like check the box activities. Hey, our company goal is XYZ, and the way that we're attacking them across all these different groups is in our annual plan. And what is needed from me, for instance, is we don't have enough fully ramped up sales reps to hit our revenue goal 2 quarters from now. I should be proactive on making sure we have the recruiting capacity, the onboarding and training capacity for sales leaders, that I'm working with our head of sales to build this plan so that we don't get 2 quarters from now and miss our plan and then everything kind of melts down. Like, you should be proactive about understanding all the different parts of the business. You can do that by, again, just asking folks a lot of questions. But if you show an ability and an interest in not just your function, but how the full machine works, people will also want to work with you more, and it'll really accelerate the conversations you're into. You'll be invited to more senior groups. So don't be too literal and transactional.
Love it. And last question, how can our listeners connect with you?
Luke at lsvp.com. Shoot me a note. Say hey.
Amazing. Luke, thank you. A wealth of knowledge, 11 years of industry expertise. Thank you for distilling it and giving us a primer on so many of these concepts as well. Hugely valuable. And thank you for your time.
Welcome. It was a fun conversation, and thanks for letting me ramble at you.